Hello. Today is Wednesday, June 3rd, 2026. Here is your daily signal. According to the Associated Press, fresh escalation between the United States and Iran saw the U.S. bomb Iranian radar and drone sites after Iran shot down an American drone at the beginning of June. The conflict quickly intensified as Iran retaliated with missile strikes targeting American soldiers stationed in Kuwait, with the U.S. military reporting that all incoming missiles were intercepted. This latest surge in hostilities has triggered major disruptions in Middle Eastern oil supplies and sent shockwaves through global energy markets. Gulf nations are now responding by accelerating their multi-billion-dollar investments in renewable energy, as Fortune reports, seeking to reduce their reliance on oil exports in light of mounting regional instability. Among the key numbers, the U.S.-Israeli conflict with Iran has caused the largest oil supply disruption in history, prompting Gulf states such as Saudi Arabia and the UAE to announce significant renewable expansion plans. Major players in this crisis include the United States Department of Defense, the Iranian Revolutionary Guard, and pivotal Gulf oil producers like Saudi Aramco and ADNOC. In the near term, volatility in oil prices and supply shortages are expected to affect energy importing economies. Over the medium term, the Gulf's shift to renewables could reshape the region's economic structure and export strategies, fundamentally changing supply chains as international firms seek alternatives to Gulf oil. Persistent tensions between the U.S. and Iran also risk further destabilizing the Middle East and pulling in global powers. Next, shifting focus to global business sentiment, Fortune reports that CEO confidence has dropped 12 points this quarter as the economic impacts of the Iran war begin to weigh heavily on American businesses. The conflict's reverberations have also been felt in Dubai, where real estate markets are experiencing broad declines in property prices across all residential segments. The Iran war, which began in early 2026, has disrupted international markets and trade routes, especially as it escalates in a major oil-producing region. For many multinational corporations, exposure to Iran and the broader Middle East is being closely monitored. Real estate developers and investors in Dubai are facing rapidly changing conditions, with financial institutions and central banks tracking shifts in capital flows. Governments including the U.S., UE, and EU member states are also shaping policy responses. With CEO confidence falling and property prices slipping, the near-term outlook is for subdued global economic confidence, meaning investment and hiring decisions among large firms may remain cautious. Medium-term, continued instability could drive sustained declines in real estate values in Middle Eastern markets like Dubai. Higher energy prices and supply chain disruptions threaten to slow economic growth worldwide, and uncertainty may further tighten credit as banks reassess risk in affected regions. Finally, in tech, TechCrunch reports that Alphabet has announced plans to raise $80 billion to fund a global expansion of AI infrastructure. The capital infusion aims to accelerate Alphabet's investments in high-performance data centers and advanced computational resources as AI spending surges worldwide. Major tech companies, including Microsoft and Amazon, have previously launched similar capital raises, resulting in significant infrastructure build-outs. Sundar Pichai, CEO of Alphabet, is leading the initiative, with institutional investors like BlackRock and Vanguard expected to participate. Regulatory oversight by the U.S. Securities and Exchange Commission will be crucial as this huge funding round unfolds. Among the immediate consequences, competition for AI hardware and semiconductor supply chains will intensify, and global data center construction and associated energy consumption is set to accelerate further. Medium term, Alphabet's expanded capabilities will let it provide scalable cloud AI services to enterprise and government clients, but could also invite regulatory scrutiny and antitrust reviews across multiple jurisdictions. Alphabet's move marks a decisive step in the global race for AI leadership. Now, onto the markets. International markets were generally down for the day, with Germany's EWG slipping 1.66%. Netherlands managed the strongest monthly gain, up nearly 8.5%, while Chile and China posted the sharpest monthly losses. Commodities saw mixed action as USO, tracking U.S. oil, rose 2.6% today, whereas platinum fell about 3.3% and copper dropped 2.7%. Silver led on monthly gains, up just under 1%. Turning to favorites, AMD jumped 2.4% and surged 56% for the month. but Microsoft posted a daily loss of 3.6% despite ending the month in positive territory. Nvidia retreated 3.1% for the day after its strong monthly run, and Oracle slid 6.4% despite a rising month. In sectors, the S&P 500 dropped 0.66% today but remained up nearly 5% for the month. Semiconductors were the best performing sector, with stocks rising 1.28% today and over 32% monthly. Healthcare climbed 1% today, its second consecutive weekly gain, while finance declined 1%. Today's top stock gainer was XOS, jumping 168%, while the steepest loss came from XCOM, which tumbled 59%. That's it for today. You can find more news and details on our website. Goodbye.